So backtest for 3 months minimum, and or 6 months of backtesting with tape reading. That means when you're tape reading, you're literally sitting in front of the charts, watching live data print on the charts, but you're not taking the entries. You're not even pushing a demo account. You're doing it for experience, reading the price, watching how it reacts. And then what you're doing is you're seeing, say, for instance, you're watching the S&P, okay? And you think it's going to go down to a particular level. You know you're drawing liquidity. You know it's likely to go lower. You're waiting for the fair value gap to form, and you want to watch and see how it gravitates up into it. How does it react? Does it immediately deliver after it goes into a fair value gap? Does it hang around a little bit and then start moving in your favor? Does it go down and then come back up to it one more time and tap into it, which is the reason why I don't teach trailing your stop loss aggressively, because that's a tendency in the marketplace. The algorithm can come back and touch that fair value gap one more time. And that's a normal thing. You don't see books. It's just, well, you got stopped out and, maybe you can take another trade. I'm going to go right back in that market. If I get stopped out and everything's true, I'm going to use that retouch of a fair value gap later on that I've already entered on, because I know they can be reclaimed, recycled, reused, if you will, because they are real support and resistance. You're talking about support and resistance is a joke in your mind community. It isn't if you're using the fair value gap, because you can literally use fair value gaps as points of inversion, where once they go through it, then it should act as well. If you're looking at a fair value gap that you thought was going to be bearish and it trades through it, shows no respect to it, when that comes back down and touches that again on the buy side, I expect a trade there. If everything is equal, and I know I was wrong on my short idea, and it's shown me I'm absolutely wrong, I'm going to buy that fair value gap that I would have been using for a short. Isn't that support and resistance theory? Yes. But the problem is that idea of support and resistance, you don't know what high or low to put it on. Look at everybody on Twitter. Look at everybody on TradingView, on YouTube, that uses trend lines. How the fuck did they arrive at those trend lines? And how many times is it really respecting it? They'll draw it after it's happened. Oh, look at this. This is where it touched. No, draw that line before the market comes down and touches it and reacts. I don't see that ever. I don't ever see that. I'm always looking for it, but I never see that. But how many times have you seen me and students recording our entries in management, and it's beautifully respecting that we're doing? To the level right there, bang, laser guided precision. Poor Goldman Sachs boys. So you got initially, right away, going into anything with me, you got a minimum of 6 months of never pushing a button, because you need to know how you're going to react to seeing price. Are you going to be palms sweaty and anxious about it? And you're not even in a demo, because you want to be right. And you're going to see how removing the idea of being right or wrong, take the game aspect out of it, because this is not a game. It's not a video game. This will wreck your shit if you don't know what you're doing. So you got to respect this risk. And I'll talk a little bit about that in a moment, but you want to be listening to your internal dialogue of what you think you see in the charts. And then you want to write that down and screenshot it as you're doing it. And you're tape reading, you're not just simply watching price. When you think you see something, you screen capture that. And you quickly put an annotation in there, what you think. You don't have time to be fully automating the narrative in a text format. You're literally just trying to encapsulate that moment, what you thought you saw, and then there it is. So the way you could do this is pre-type on TradingView or whatever platform you're using, fair value gap bearish, fair value gap bullish, draw on liquidity, and stop loss, first partial, have those already on your chart. And then when it's doing what you think it is, drag that little text over there. You see me typing it out because I'm proving that I'm doing this live. Okay, everybody bitches about, oh, it's a cherry pick. Bullshit. Dude, I'm doing it right next to these other guys that are doing live streaming. I'm not going to live stream. I'm not going to do that. I cannot do that and think clearly about what I'm doing. But there's no denying that what I'm doing is I can only be typing and annotating and managing a stop on one chart. In TradingView, if you're working with whether it be demo or your live account, you can only do one account. They're not letting you run two. It's the same count. So all that shit goes out the window when you really take a step back and say, okay, no, this shit's really happening. It's really happening. Yes. And you won't even worry about that nonsense if you start doing the things I'm talking about. Go look at old data, study it, get your back data stuff, how many times it's formed, when it failed, and what does that look like? I'm absolutely going to do that for you in 2023. When we come back together again in February, I know it doesn't seem like I even went away yet, has it? Anyway, in February, I'm going to start off with doing the very things I'm talking about right here. I'm going to show you how to literally go into backtesting. How I'm going to literally sit down and backtest. I don't know how long I'm going to do it, but I'm going to show you exactly what it is that you're doing, why you're doing it, what you're supposed to be doing. And then we're going to be doing live tape reading the rest of the year. That means I'm going to pull out points in the marketplace where I want you to study. I'm going to show you where I think the draw on liquidity is. And I want you to listen, because I'm going to prompt you. I'm not going to say this is a short. I'm not going to say this is a buy. I'm going to say, what do you see 1 second that you are ready to go with a live account before at least what I've said here, and expect consistency? You're going to be frustrated. You're going to blow your account. You don't even know yourself. You're going to ruin yourself. And you're going to be a statistic. You're going to be an ICT statistic where, you know, the people that rush through it and try to do it quicker, they fail and they think the shit don't work because of that. Anybody else's stuff, when they rush to go through it, there it is. It's failure. Well, it's you. It's you. You're trying to do it too fast. And you haven't seen a full year. You haven't appreciated the level of consistency and the ideas as the market dynamics I've outlined here. They happen all the time, folks.